Hi folks, Lee Gettess here with the Market Sense for the week of October 13th, 2015. We are going to look at some charts like I do every day that come from the Trade Navigator software. Looking at the weekly bond market here, you can see last week was inside of the previous week, and this week so far has also been inside. It's only been a couple days. We've had support here right around the 157 area that they seem to be holding, which looks like it means they want to go back up above 159. It's 159.04 is the resistance we have here. And that seems logical. They could do that. Of course, there's nothing to prevent them from breaking down to below 155 here. It's around 154.28 as support. And that wouldn't really look bad if they were to break down that far. It's still holding in the middle of the range here, so that wouldn't be too bad. They could do that. We do have a couple of reports. We have the PPI and CPI due out on consecutive days this week, which could possibly have an impact. But I don't know. What could inflation data do that would shock the Fed into action? Not much, I don't think. So we're probably relatively quiet until we hear some more clues from the Fed, I guess. Stocks have turned down a little bit for the first part of the week. Nothing major, though. The support for them to hold, if they're going to continue to trend up, is down here at 1975, and they're still comfortably above that. The upside target is around 2035. Won't be surprised if they don't get there, but getting there would look pretty good, and it would mean they would be back up testing the whole area that they broke down from here, above the swing low and all, but the sideways pattern they broke down for. If they get up to 2035, they'd be testing that, and that's kind of normal behavior for a market, so that would be no big deal. The hard part in trying to find risk to define here is that they could drop down here to the 1945 area at the middle moving average, or they could drop all the way down to the lower moving average, which is just below 1900, neither of which would look like a really serious breakdown. I mean, it wouldn't be damaging anything. So I don't really think they'll go that far down, but they could, and it wouldn't mean that there was anything wrong with the market. So it's very difficult to try to find any trade location that is low risk in this environment. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see how we're looking at things.